What is going on, guys? Welcome into Stock Talk with Nico Kritikos. Today, we're going to be taking a look at NEO stock because the stock is up over 12% today. Looks like the main catalyst for this is the fact that this says that Chinese stocks are trading higher following reports suggesting that Chinese officials would embrace a moderately loose monetary policy. So, not something that is specific to NEO stock necessarily, but just for Chinese stocks across the board. So, if we want to take a look at this company, though, and their financials, what we're going to see is that, keep in mind, this is a $10 billion company. Trailing 12 months, they did 8.7 billion in revenue, so not bad there. That's not bad. The last couple of years, they've grown revenue 62% per year on average, so the growth rates have been very nice there. Then we go to net income, and it's the opposite story. We're looking at consecutive years of it getting worse. Last year, they lost $2.9 billion. Last 12 months, they lost 2.9 billion, so I guess it's been stagnant there. The balance sheet has gotten, I would say it used to be a lot better three or 4 years ago. Now it's roughly, the cash is not as much as it used to be. And so the debt and the capital leases have gone up, and we're looking at, it's almost the ratio is almost 1 to 1. So not great there. Shares outstanding, not surprisingly, this has gone up, which is not going to help the stock price out at all. And that's probably a main reason why the stock is down 31% in the last year. Not to mention, I mean, this stock was $62 3 years ago, and it went all the way down to what, $4? I think below, yeah, below that $3. So I don't know. This is not a company I would invest in, although the good things I would say is the EPS, although I mean they are so far away from profitability though, -$9 expected this year and then -7 expected next year. So things are getting better, but I mean that's a long way away. That's a long ways away from having a positive number now. Revenue is growing very quickly. Next year they're expected to do 43% revenue growth, $98 billion of revenue. And that's a lot. So that's the good thing. But it still doesn't justify the fact that you're paying $10 billion for a company that is losing money. And I mean, if we look at a valuation like price to sales, in the past it's traded at some insane valuations, which there's no need to even look at that. But the last couple of years, it's been, trading between a 2.2 and a 0.8. And so I would say under two, if you were interested in buying this stock, paying less than 2 times sales is probably not horrible. I mean, so it's at 1 time sales right now. That's if you look back, that's actually the cheapest it's been pretty much too. So from that perspective, I guess that's a good thing. But I mean, there's a reason for that. And so I don't know. I'm not seeing a whole lot of people always talk about this company that it's going to be a huge threat for Tesla and stuff. But I mean, I don't know. I'm not really seeing it like that. So that is my analysis for Neo. Let me know what you guys think down below, and I will talk to you guys in the next video.